Hi, welcome to the Market Alert for Friday, the 26th of May 2023. So headlines: NVIDIA adds record market cap. Everything else dumps as debt ceiling idiocy continues. So, we'll wait and see what happens. I think it's the 1st of June is D-Day. Tech stocks surged on NVIDIA's post-earnings boost, while debt ceiling progress and strong data added to the positive bias. So somebody said, actually, maybe we can do this. And that was enough to move the market up. NDX soars on NVIDIA moonshoot. Debt ceiling optimism puts pressure back on the Fed. It's just a game of tennis, isn't it? It's batting the ball from one end to the other just to move the market. However, the rumours come out. We'll find out, like I say, on D-Day. And I'm sure it's the 1st of June when this happens. I don't really pay a lot of attention, to be honest with you, because they're going to raise it anyway. They're not going to default on the debt, as I've said before. Yeah, today news, economic news, general news, 7 a.m. retail sales, and then we've got core PCE, durable goods orders, and then at 3 p.m. we've got UOM, revised consumer sentiment. So let's have a look at the market's reaction to NVIDIA yesterday and the so-called debt ceiling optimism. And we'll kick off with the Dow. So in the Dow yesterday, you can see that we've got some demand. We're now heading towards oversold. We're through the 200 MA, which we saw yesterday, but we have got that demand and we're at 62% retracement of a bigger swing in the market. If I just move the chart over to the left, you'll see where it's being drawn from. So from here up to here, takes us to 62, the golden ratio over on the left, and like I say, we've got a bit of demand there at the moment. Yesterday's activity was very choppy, as you can see there, up and down in a range of 150 points. We then had a dip to the downside late on. This was at 1705 p.m. and then we had a retracement at the low. You can see how the market came off that area as well before. And then we moved back up to the DP, so a nice 200 points or 250 points there as the market moved back to the upside. Overnight, the market is sideways. We're just below the close and the pivot point there, the DP. So it'll be interesting to see if the market's going to head down to the low or it's going to move back up to the high, but we'll just have to wait until the futures open at 7 a.m. In the German DAX, also demand up for yesterday, heading towards oversold, not quite there yet. 89% retracement as well from here back to here. This is where the market stopped before. In the 30-minute charts, you can see yesterday we went through the low early on, but we picked up with buying at the S1, bringing the market back to the close and the 50 MA, and then again close in the afternoon. But we spiked through the low in the morning, or actually with the Dow, and the market then coming back. This area here, of course, is down at the 89, so you'd expect the market to find support, and I mean the 89 of the daily chart from this move to this, so you can then go into a smaller time frame, see the action, and you can see there that the 89% retracement in the 30-minute chart is down in this area. You'll also see it in the smaller time frames as well. And there's your climatic volume. As we go through the S1, you've got the demand, we're oversold, and then they start moving the market back. But we had the sell-off to begin with, which you can see there, the market straight through all of the averages with the first 5 minutes, and then continuing lower. And then just treading water in a range, well, say a range, it was a good range. This is a good 70 points, all the way back 70 points. And following the Dow, of course, afternoon on this so-called optimism of the debt ceiling and the NVIDIA record profits. So overnight, the market sideways there. Let's just go back to the 30-minute chart and have a look. So we're below the DP, the close, the 20-bar moving average. We've got a bit of a retracement there that we could move to the upside off. And again, as we're near the DP, we're equidistant for the, or more or less equidistant for both the low and the high of the previous day there. And trades for yesterday, £173 in profits. And then we've got 4.98 on the win-loss ratio and, the profit factor. Win-loss ratio 50-50. And like I say, losses don't bother me. I had a small loss, but then when it went in my favour, I just let it run. And that's the same for the week, which you can see there. We've got £520 for the week. We've got 5.43. We've got 64 to 36 win-loss ratio. But again, for the week, moving in the right direction there. And in the S&P 500, you can see the market moving back up yesterday. This one actually is a lot stronger. It's probably because it's a broader market and trading down to 38 or trading up to 38%. They're having traded down to 89 the day before. So again, a bit of demand there trying to absorb the selling coming into the market. These are the upside targets should the market move higher today. Yesterday, coming off the close in the DP, very choppy, as you can see there, and then retesting as the cash market opened for the S&P and the Dow, but making its way up. And again, same as the other markets at the moment, same distance between the high and the low. In the FTSE 100, still some weakness around yesterday, trading down towards 62 overnight. We've got the 200 MA there, and below this we've got the 78 and 89, just in case prices move lower. However, if they don't, then we've got these targets on the upside. Again, it all depends what happens when the markets open at 8 a.m. So keep those in mind as well. And then in the 30-minute chart, you can see the market double topping yesterday morning, and then moving lower down to the low where we get the bounce up to the 20-bar moving average that fails to hold the market. But not only that, we get an 89% retracement where the market then goes through the low, and it goes through with a big bar, drives through, and then you see them starting to buy in on this bar here, slowing the market down. It's the shorts getting out of the traders getting out of their short positions, so they have to buy. And then we get a retest at the S1, then the Dow moves up, and we see the FTSE electronic market doing the same. However, overnight, we're a lot closer to the low in this market than all of the other stock markets at the moment. And in the currencies, GBP, JPY, we got some selling again yesterday. There's a lot of supply around in this market at the moment. It's being held on the highs, a bit of weakness in the dollar overnight. So look at the 30-minute for GBP, JPY. Yesterday, about an 80-point move, and then back down, going through the close of the previous day. Just in a sideways move. I think the debt ceiling thing is playing hardball with these currency markets at the moment, all trading more or less sideways. In the pound, a bit different story because of the core increase in CPI on Wednesday. We've got an 89% retracement there in the daily chart, so the market could find a bit of support today. If so, it's worth drawing in from there to give you some targets on the upside, and then drilling down into the 30-minute chart to see where they appear in the sort of resistance areas and profit target areas as well. But yesterday, the market retracing, moving up to the no man's land. Actually, there was nothing there, but then it came back down to the low and the close, moving back up but failing to hold. We drive through these areas, as you can see there, then it becomes a resistance, market down to the S1 before we then start to see a bit of a sideways move overnight, trying to get back above the DP and the 50 EMA. If it does this successfully, that means the dollar's got to move lower to head back towards yesterday's high. And yesterday, the dollar up once more, this time on the optimism and not pessimism. But overnight, the dollar giving up some of these gains. It's been straight up for the last, looks like 14 trading days there, ballpark. So no surprise that we should see a bit of a pullback there. But let's have a look at the reaction of the metals yesterday. We'll kick off with silver. We can see that we're down towards the 200 MA there. I suspect that that's going to be tested, despite the fact that we've got some demand coming into the markets. We're also trying to get back above the 89% retracement there as well, which is drawn from there, projected down to there at the moment. We could actually use this one here as well and project up. I think this is the new high, so let's just have a quick look at this one. Not that it means a lot these days with these traders. That's the one, isn't it? So from there to there. So yeah, there you go. So 78 is tying in with that 200 MA, so that makes sense. So yeah, watch the 200 MA. That's at 22.48. So psychological level is 22.50, and I wouldn't be at all surprised given how they again, after as soon as the market opens on the COMEX, well, it's now the CME. You can see how the market is pressured to the downside, and has been for the it's that same pattern again. And you think that's an interesting pattern in silver. Wait till I show you the gold chart in a second. So we traded down to the low of yesterday over on the overnight, and we're actually bouncing off this at the moment. Say a bit of dollar weakness is all that's driving this at the moment. In the gold market, down again yesterday, but some demand trying to slow things. 50% retracement in this market from the major swing that you can see over to the left there. That's where it's drawn from up to here and then projected back. So we've got a 50% retracement. But in the 30-minute chart, you can see they're absolutely crushed yesterday and then failed to hold until overnight, where we've seen them buy back in at yesterday's low. So the overnight market driving the precious metals prices higher as I record this morning. And finally, and gold silver ratio has continued to move higher over the last few days, but overnight we're starting to see this pull back a bit, and with silver driving the price a bit faster than gold, as again, just as I record. We'll have to wait and see what happens when the market opens at 1:30, and with BlackRock, who've now taken up the mantle of squeezing the market, biggest company on the planet. So again, no surprise, is it? I mean, we're down to what, 22.50. I mean, it's like I say, 60% cheaper than it was in 79 and 2011. Everything else that you buy, see, or whatever is 100%, 200% higher than it was just 2 years ago. But silver, unfortunately, is still being crushed, and the price suppressed by the derivatives market. And it will stay that way until they stop doing it, I'm afraid. But when they do, then it will be like letting off a rocket when it goes vertical. But I don't know when that day is going to be. I've been in this market now. The first trades that I ever did were buying July 550 calls in 1991. So work it out for yourself. It's 32 years or more. So yeah, 32 years. And that was at $5 an ounce. I mean, of course, it's gone up since then to $22.50, but even so, it's been a long haul, and it should be nowhere near that price. And having gone up to $50 an ounce in 2011 to only be slammed back down to $13 during COVID. So we know there's something weird and strange going on there, and it's patently obvious to anybody with half a brain cell. Anyway, on that cheery note, that's it for this one and for the week. We're also bank holiday on Monday. It's also, I think, Memorial Day for the US on Monday as well. So I will see you either Tuesday or Wednesday. Depends what happens today. So we'll just take a view accordingly. So have a great weekend. The weather's nice. And as ever, thanks for watching. See you in the next one.